Yo, I ain't here for the money, I ain't here for the fame. Though it might be nice to own a jet plane, I'ma do it all for you.
Welcome to today's market update, where we delve into C3.ai, Inc. and its highly anticipated earnings report for the quarter ended April 2023. C3.ai is poised to deliver increased earnings despite lower revenues, which could have a significant impact on the company's stock price. In this analysis, we will explore the consensus estimates, examine the trend in estimate revisions, and consider the company's earnings surprise history to provide a comprehensive understanding of the potential movement of C3.ai's stock. Additionally, we will highlight other factors that investors should consider before making any investment decisions. Let's do a quick market overview. Following the news of a tentative agreement on the debt limit in Washington, the S&P 500 concluded the day flat, leading to mixed market performance. Despite an initial positive start driven by a sense of relief, enthusiasm waned as the day progressed. The light data calendar allowed the markets to focus on prevailing themes, such as moderating inflation, the outlook for future Federal Reserve actions, and a slowing economy. Global equities exhibited a mixed performance, mirroring the uncertainty, while commodities experienced diverse movements, with gold gaining momentum and oil facing downward pressure. Interest rates declined, with the 10-year Treasury yield approaching 3.7%. Notably, the technology sector emerged as the decisive leader, extending last week's rally and driving tech stocks to rise over 30% year-to-date. Debt deal heads to Congress. President Biden and House Speaker McCarthy recently announced a deal to raise the debt ceiling, providing a potential resolution to avert a partisan clash that could have resulted in a default. However, the deal is not yet finalized, as it must pass through Congress. The House is expected to vote on the agreement, followed by the Senate. While the agreement's ultimate passage is anticipated, failure to secure approval on the initial vote could lead to legislative delays, potentially extending beyond June 5. Such delays may result in certain government payments being deferred until the deal receives full approval. Although market reactions are expected to be relatively muted, delays in the process could trigger fluctuations in stock prices. The deal's specifics include raising the debt ceiling until January 2025, reclaiming unused COVID relief funds, streamlining certain permitting processes for energy projects, and maintaining non-defense discretionary spending at a flat level for 2 years. Overall, the agreement removes a potential shock to financial markets, but its fiscal impact on the broader economy is expected to be benign. Checking performance. Equity markets, including the S&P 500, posted modest gains last week, resulting in a year-to-date increase of over 10%. The rally in growth stocks has been the primary driver of these gains, while value-style investments have remained relatively flat due to concerns surrounding a slowing economy and its impact on cyclical components of the equity market. In a diversified portfolio, international equities have also logged gains similar to those of the U.S. market. However, emerging market equities have experienced more modest growth, primarily due to uncertainties surrounding the Chinese economic outlook. Bonds have rebounded, registering modest gains in 2023 as interest rates have retraced from the highs seen in October of the previous year. Looking ahead, while it is unlikely that the year-to-date gains will be fully reversed, some volatility is expected to return in the summer months as evidence of an economic slowdown becomes more evident and markets react to uncertainties surrounding upcoming Federal Reserve policies. Despite this, the overall outlook remains positive, with expectations of a new bull market emerging as we progress toward and through 2024. C3.ai earnings preview. C3.ai is scheduled to release its earnings report on May 31, 2023, and investor focus is keenly directed towards the company's performance. Analysts anticipate that C3.ai will deliver a year-over-year increase in earnings despite lower revenues. The consensus estimate for the quarter suggests a quarterly loss of 17 cents per share, which represents a significant improvement of 19.1% compared to the same period last year. Revenues are expected to reach $71.18 million, reflecting a decrease of 1.6% from the year-ago quarter. Estimate revisions and earnings whisper over the past 30 days. The consensus EPS estimate for C3.ai has remained unchanged, indicating that the covering analysts have collectively maintained their initial estimates during this period. While this suggests a level of stability, it's important to note that individual analysts' revisions may not be fully captured in the aggregate change. To gain further insights into the potential business conditions for the quarter, we can examine the earnings whisper model's predictions. The Earnings ESP, expected surprise prediction, compares the most accurate estimate to provide a more recent and potentially more accurate prediction of the earnings outcome. A positive earnings ESP reading indicates the likelihood of a potential earnings beat. Currently, C3.I boasts a positive earnings ESP of plus 6.67%, which suggests that analysts have recently become more bullish on the company's earnings prospects. Analyzing a company's earnings surprise history provides valuable insights into its ability to meet or exceed consensus estimates. For C3.ai, the company has a track record of beating consensus EPS estimates. In the previous reported quarter, C3.I was expected to incur a loss of 22 cents per share, but it outperformed expectations by delivering a loss of only 6 cents per share, resulting in a positive surprise of plus 72.73%. This consistent trend of surpassing expectations over the last 4 quarters further strengthens the potential for C3.I to beat the consensus EPS estimate in the upcoming report. While an earnings beat or miss is not the sole determining factor for a stock's movement, it does significantly influence investor sentiment. C3.I appears to be a compelling candidate for exceeding earnings expectations, supported by positive estimate revisions, a favorable earnings whisper, and a history of beating consensus EPS estimates. However, investors should consider other factors, such as market conditions, industry trends, and management's outlook shared during the earnings call, before making any investment decisions. I am long-term holder of AI. I think they will surprise. I am long on this stock, and industry trends seem to be in favor of earnings beat. They are expecting to move 13 points in either direction. The way market and industry is pointing is only up. As always, do your own research. This is not a financial advice or recommendation to buy, sell stock. Please subscribe and like the video as it helps us to make this content for you.